All right, let's talk GST returns. If you're running a business in India, you know what I'm talking about. It can feel like this incredibly complex puzzle. But believe it or not, there's a really simple logic to it. And today, we're going to put every single piece in its place so you can see that crystal clear picture of the whole process. So, let's dive right in.
Yeah, this right here is the source of so much confusion, isn't it? GSTR1, GSTR2B, GSTR3B, it's just this alphabet soup of forms. It's enough to make anyone's head spin. But here's the thing, and I promise you this, there's a super simple, surprisingly logical thread that ties them all together. And we're going to find it.
So, our whole goal here is to just strip away all that complexity. We're going to break the entire monthly GST process down into just 3 simple, logical steps. That's it. By the end of this, you're going to have this solid mental map of how it all works, and it's all going to click. Okay, so here's how we're going to do it. First, we'll look at the monthly GST roadmap. Then we'll hit step 1, declaring your sales. After that, step 2, tallying your credits. And step 3, the final calculation. We'll also touch on a simpler path for small businesses and wrap it all up with why this whole chain of events really matters. Let's get into it. All right, first up, let's talk about your monthly roadmap. The whole system, literally everything we're about to discuss, is built around 3 deadlines you've got to remember. Okay, get ready to etch these dates into your mind. By the 11th, you report your sales. That's GSTR1. Then, on the 14th, the system magically shows you your tax credits in your GSTR2B. And finally, by the 20th, it's time to pay your tax with GSTR3B. 11, 14, 20. This timeline, it's the absolute backbone of the entire monthly process. Okay, so let's dive into step 1, declare your sales. This is your starting point, GSTR1. It's the very first move you make each month, and it's all about one thing, telling the government exactly what you sold. Now, the best way to think about GSTR1 is to imagine it as your official sales diary for the government. And this is key. It's not a bill. You're not paying anything yet. It's a statement, a declaration. You're just listing out all the sales you made, all your invoices. It's you telling your side of the story for the month. So, what are you doing here? Well, you're listing your sales invoices, right? The why is to declare your tax liability. And the when is super important, by the 11th of the next month. But here's the absolutely crucial point. The real reason this step is so important. When you file your GSTR1, you're not just talking to the government. That data becomes the source for your customers' tax credits. You're kicking off a chain reaction. You're the first domino. Okay, that was step 1. Now for step 2, tallying your credits. So you've told the government what you sold. Now the system does something pretty brilliant. It automatically helps you figure out the tax credits you get back from all your business purchases. This is where the automatic helper, GSTR2B, comes in. So what is this GSTR2B? Think of it like a personalized, automatically generated tax coupon book. It's a list of all the input tax credits, or ITC, that you can use. Basically, it's all the GST you paid on your business expenses that you can now claim back. And the best part? You don't have to fill this out. The system creates it for you. And here's where it all clicks into place. Look at this. Your action has a direct reaction in the system. When you file your GSTR1, your sales diary, that information instantly populates your customer's GSTR2B, their tax coupon book. It's a perfect mirror. This is the heart of the whole system, the seamless flow of data from supplier to customer. So, to recap, GSTR2B is an auto-drafted statement of your available ITC. It shows up on the 14th of the month. And how does it get its data? Well, it pulls it from the GSTR1s of all your suppliers. Now, here's a really interesting fact. We used to think of this as a static, unchangeable report. But actually, that's not the case anymore. It's now dynamic. If you find an invoice in there that's wrong and you reject it, the system can actually update your GSTR2B. It gives you way more control. Okay, we're on the home stretch. Step 3, the final calculation. We've declared our sales in GSTR1. We've seen our available credits in GSTR2B. Now it's time for the bottom line, the GSTR3B, where we put it all together and figure out what we actually owe. And that brings us to GSTR3B. If GSTR1 was your sales diary and 2B was your coupon book, think of 3B as the final bill. It's not a long, detailed report, it's just a summary. It takes the grand total of tax you collected on your sales And then you subtract the grand total of credits you've got from your purchases. Simple as that.
The calculation itself is incredibly straightforward. You start with the total tax you owe on sales, which comes from your GSTR1. Then you subtract all your available tax credits from your GSTR2B. And the result? That's your net tax due. That's the amount you have to pay to the government by the 20th of the month.
Okay, here's a little pro tip for you, something that catches a lot of people out. Let's say you file your GSTR3B late. You might notice the late fee doesn't show up right away. That's because the system automatically tacks it onto your next month's return. So don't be surprised when you see it pop up later. It's just how the system works. So that's the standard monthly grind. And, it can be a lot, especially if you're a small business. The good news is the government recognized this and came up with a simpler option, something called the QRMP scheme. QRMP, it stands for Quarterly Return Monthly Payment. And really, the name tells you everything you need to know. Instead of filing your big returns, your GSTR1 and 3B, every single month, you can file them just once a quarter. A huge time saver. So who's this for? It's for businesses with an annual turnover up to 5 crore rupees. Now, there is one key feature to remember. You still have to pay your tax every month. But what about your customers? How did they get their credit? Well, there's a special tool for that called the Invoice Furnishing Facility, or IFF. For the first 2 months of the quarter, you can use the IFF to upload your business-to-business invoices so your customers get their tax credits right on time. It keeps that whole chain we talked about moving. Okay, so we've gone through all the steps, the forms, the deadlines. Let's just pull back for a second and look at the big picture. Why does this whole chain matter? Why is it set up like this in the first place? The whole flow from GSTR1 to GSTR2B to GSTR3B, it's not just random bureaucracy. It's designed to create this completely transparent chain of transactions. Every single sale gets matched to a purchase. This makes sure that the tax is tracked accurately and that credits are claimed correctly at every single step of the supply chain. It's a really clever system of checks and balances. So there you have it. Once you see the logic behind it all, it's not so intimidating, right? It's just a simple 3-step dance every month. So I'll leave you with this to think about. Now that you see how the whole chain is connected, what's the one step you'll focus on to make sure your business runs smoothly? Is it filing your GSTR1 perfectly on time, or is it digging into your GSTR2B to make sure you're getting every credit you deserve? Something to think about. Thanks for tuning in.